Good afternoon and welcome to the webinar. With us today we have Bill Snelling, Supervisory Housing Program Specialist for the United States Department of Housing and Urban Development's Program Support Branch. Mr. Snelling has been with HUD here in Columbia for the past 31 years. He provides marketing and outreach support for FHA single-family insured programs. He is liaison to realtors, citizens, lenders, nonprofits, industry groups, and state and local governments while monitoring and supporting homeownership programs. He also provides oversight of HUD-approved housing counseling agencies in South Carolina. Mr. Snelling previously served as supervisor of both the single-family production branch and mortgage credit branch in the Columbia office, and also worked 3 years as a bank examiner with the Federal Deposit Insurance Corporation. And although he's a Clemson University graduate, we are happy to have him here with us today. Thanks for coming, Bill. Now we'll hand it over to you.
Well, thanks so much, Sharon. This is the first webinar I've ever done. I was hoping that I'd remain anonymous and not show up on the camera. My standing joke with HUD is when I talk to audiences is I've been with HUD so long. When I first started with HUD, I was tall, dark, and handsome, and now you see what's happened to me after 31 years. But it's my pleasure to be here, and just want to start the seminar off, and we've always had a good relationship with the South Carolina Association of Realtors. But the seminar heading is, real estate sales opportunities, FHA and HUD, and what I want to try to do is just give a brief overview of FHA and HUD, and then also your opportunities to sell HUD homes, and also take questions. Most questions we'll answer in the last 10 minutes of the webinar. But thanks for tuning in, and we'll get ready and get underway. My first slide is just what is HUD FHA, and what FHA is a part of HUD. It was folded into HUD in the early 70s, and FHA is the Federal Housing Administration, and we provide mortgage insurance for single-family loans, and the mission is to help low to moderate income people acquire home ownership. And mortgage insurance insures the lender against loss, so it allows the properties, the lenders to make the loans. Private funds, not government funds, which are supported by the FHA mortgage insurance premiums that the borrowers pay to support the fund. And knock on wood, so far we haven't had to have a government bailout yet. So and the funds are still sound. Our FHA loan advantages, moving over with our programs, we still require just a 3.5% down payment, which is one of the best deals out there in the industry at the moment, and we'll discuss that later when you can just see the volume trends, how they've exploded over the last few years. We'll get to that a little bit later in the session. But sellers can currently still contribute up to 6% of the sales price in seller concessions, such as paying closing costs, prepaids, and potential discounts for the buyer. Now, as a result of some analysis and everything, and working to shore up the mortgage insurance funds, we may be reducing that 6% contribution at some point in the future. It was put out for comment, and interestingly enough, there were 902 comments received as far as possibly reducing the 6% down to the standard conventional amount of 3%, and out of the 902 comments, 900 were against it. So they are considering that input that was received from the real estate industry, and hopefully it won't be reduced fully down to 3%. But again, that's a policy issue that's made in Washington, and not for me, and I really shouldn't be commenting on it. Flexible underwriting criteria are used to qualify our applicants. We allow the lender to tell us why the borrower qualifies for the loan. Again, in these times where credit has been tightened up all across the board, we've had that happen with our FHA loans too. some lenders in the secondary markets have put additional requirements on the processing of FHA loans and credit requirements, and they're not FHA specific, because we would take loans that some lenders are turning down, but as a function of the marketplace, we have to, you have to deal with those, and particularly in regard to credit scores is one of the major areas. FHA really doesn't have a credit score per se. We have a couple. If you're under 500, you can't get an FHA loan. We have some additional equity requirements. If you have a 580 credit score, you have to put 10% down. But practically speaking, the industry has set a standard of 620 as the going credit score that's acceptable for an applicant borrower to get an FHA loan. Now, one of the good things that we have that we allow, is, and it's different from a lot of the conventional processings, you can use a non-occupant co-borrower to be the financial strength of a transaction if they're a related party. And co-borrowers, if they're related, can be really the whole financial strength. The occupant borrower has to have a credit score. And if that's the case, we used to do a lot of kiddie condos, condominium complexes around major universities, such as some of those in Columbia here, where we're located today. But if the occupant has a credit score, almost the total financial strength of the application can be the non-occupant co-borrower. But again, they do have to be related. Move on. Our FHA loans are still assumable. Interest rates have been low for a very long time now, but with credit qualifying for an owner-occupant, the loan can be assumed. And if interest rates do ever start rising again, which at some point in time they will, the last 10 years have been a low interest rate environment, but we have a loan out there that is assumable, and sometimes that's very attractive when someone's making a purchase of a transaction. We do have our automated underwriting systems that hopefully streamline the process and help move loans through the FHA or just the regular approval scheme, and the underwriting systems, if they approve them, they speed it up and you have less requirements. We still allow gift funds to be used, and they can fund the entire down payment and also cover closing costs and prepaids. Now, they generally have to be from a family relative or a closely involved party, but gift funds can still be used on FHA loans, which is sometimes different in other loan programs that are out there. Our qualifying ratios are 31% for housing expense and 41% for total indebtedness, gross ratios based on what your PITI is divided by your monthly gross income. Shouldn't exceed 31%. Or 43%. Now, for new construction, due to the energy enhancements and energy requirements, we bumped the ratios up 2% in both areas to 33 and 45. So, from the income standpoint, those are pretty flexible ratios. Some of our other loan requirements. Of course, our FHA programs are set up for owner-occupants, in most cases only. Now, with one exception, we do allow our HUD Homes, our HUD Home Sales, our repo properties that we're selling, to be purchased by investors with a significant down payment. On a single-family property, they have to put 25% down. So we don't see a lot of investor people buying our properties with FHA loans, but it is a possibility. Until recently, we hardly saw any, and we've seen a little bit of activity in the last several years. Of course, there's no income limitations. The more money you make, the better. We like to have as well-heeled borrowers as possible to get our FHA loans, but as a practical matter, we generally serve the bottom half of the mortgage market with our FHA programs, and a lot of times income is just barely squeaking by. U.S. citizenship is not required. You do have to have a Social Security number, and you have to prove that you have the ability to work here for the first term of the loan, and most of the time that's obtained through the Office of Homeland Security, and you get that proof from them. But you don't have to be a U.S. citizen, but you do have to prove that you have the ability to work here for a sustained period of time. We recently had a change in our upfront mortgage insurance premium structure, and the upfront premium is 0.75% of the mortgage amount, and that's normally added to the mortgage amount, and it's financed. And the monthly premium is now at 0.9% for loans that are will have maximum financing or financing more than 95%, and 0.85 if it's monthly, if it's more than a 5% investment, or 5% or more investment, I should say. Some of our other requirements, always people like to drop the mortgage insurance premium, and with FHA loans they can be dropped after payment of the premium, after 5 years of payment of the loans, when the loan-to-value ratio meets 78% of the original appraised value, then the mortgage insurance premium can be changed. And again, sometimes most of our loans start off at 97.5% financing, so probably MIP won't drop off of those loans until 10 or 12 years have elapsed and payments have been made. But if for some reason someone put a larger down payment, say they put down 25% to start with on an FHA loan, and that's somewhat unusual, but after 5 years they definitely would be able to drop their mortgage insurance premium. Right now our maximum mortgage limit on FHA is around, for most of the state, and the Columbia area in particular, is $271,050. In other words, we can insure a mortgage amount up to that amount. Now, in certain high-cost areas, we go much higher than that, and Georgetown County actually has a maximum mortgage amount of $395,000, and that's primarily because of Pawleys Island and high resort sales down there. But again, that's a lot of property down on the coast, down on Highway 17 down there. A lot of those plantations, subdivisions that are off Highway 17, you could do a loan in them up to $395,000 in Georgetown County. But we do have, Charleston is $335,000. The tri-counties down there. Beaufort County is higher, to up $380,000. But across the state, most of the areas of the state and the counties of the state, the maximum mortgage limit is $271,050. Of course, all our properties have to meet decent, safe, and sanitary standards, but at one time we used to require a lot of repairs to be made to properties, and now we've really relaxed in that area, and we don't require near the repairs that we used to years ago. And we are flexible in the repair requirements. And we cover up 1 to 4 units. And condominiums, if you have FHA insurance on them, they're much easier to sell in today's market. And we do have a list of our FHA approved projects that are on the internet and can be accessed that way. Just want to talk about the volume trends in FHA. Of course, we all know what's happened to the housing market starting in 2000, and back in 2000 we were sucking wind, or whatever you want to call it. We weren't doing much volume in the state, and as you can see in the slide there, in 2007 we did in the calendar year. We did 116 loans with an average loan amount of $128,000, and these are all purchase money loans, purchase money mortgages. And then the bottom fell out, obviously, and we know what happened in the late fall and of 2007 and 2008, because many of the other lenders pulled out of the lending market. Our volume about tripled in 2008 up to 11,000. Now in 2009, last year, we did 13,225 loans. And again, these are purchases. And in 2010 through September 30th, we did 10,607. So we probably should exceed last year's total if sales still continue fairly strong. And we're talking about so year to date this year, $1.5 billion worth of loans total aggregate amount, and the average loan is $142,607. So we're still serving the bottom part of the market, but again, keep in mind we can go up to $271,000, in most markets and higher in high cost areas. Some of our most popular FHA programs. The standard program is just our 30-year fixed rate mortgage. 203B is our standard loan program, and of course you can normally have 15 or 30-year terms. Primarily they're 30-year terms. We do have adjustable rate mortgages, and some people think that's a bad subject to bring up. But really and truly, with our FHA programs, I was talking to a lender the other day and they were saying he could do a start rate on a 5-year ARM that would be 2.75%. The starting interest rate, and it would be fixed for the first 5 years of the mortgage, and then the caps were 2% yearly up to a maximum of 6%. So in that particular example, the maximum interest rate, even if interest rates skyrocketed, would be 8.75% after 6 or 7 years down the road. So someone that's going to only be living in a property for 4 or 5 years, the FHA ARM, 5-year ARM, would be certainly a program to consider. Of course, I mentioned condominium loans earlier. They're under Section 234C of the Housing Act. And we also have a rehabilitation loan program, our Section 203K loan program. And that's a program that has picked up again in popularity. A number of years ago, we used to do a good many in the state, 500 to 600. And it dropped off almost to nothing, but it's picking back up, particularly in today's market. And this is a program that may help you move one of your properties that you have listing, or help you sell a property that needs work. With the large inventory of repossessions on the market for sale, sometimes they need to be fixed up, and the 203K loan might be a perfect vehicle to fix it up. And again, just recently in the last year or so, this program has really been picked up in a lot, and I think it's just a function of the marketplace. But again, this might be a way for you to make a sale, because you get money to purchase the property, in the loan, and funds to repair it are set aside in escrow at loan closing, and as the repairs are completed, the funds are released. So it's a great way to get a property back in shape and make a sale. Some sales contract considerations and how to write the contract. If you structure the deal with the seller paying all the closing costs and prepaids, the purchaser can move in with 3.5% out of pocket, but that's the way the contract should be structured if you can do it. Now of course you need to know what the seller wants to net out of the property, and then you add back your closing costs, prepaids, and sales price, and come up with a potential sales price, and just hope that the appraiser can find comps to support it. But the thing to remember is if the purchasers have to pay their own closing costs moving forward, their closing costs could equal 6% out of pocket, or they could come out of pocket with 6% of the funds that they would need, based on the sales price. So one other thing too, if there are repairs required and then they're less than $5,000, we can sometimes add those repair costs into the deal if the property is selling for less than the appraised value. And that, and as usual, we're gonna have a appraisal on all FHA sales, and and it does have to support whatever the transaction is, and what we're trying to do. But again, sometimes even not doing a 203K, you can make properties work. If someone's picking up a property fairly cheap and it's appraising for more, but it needs some repairs, you might be able to roll some repairs into the transaction, if they're less than $5,000. Moving on, what are HUD Homes? Well, HUD Homes are properties that we've required when we've had to pay a mortgage insurance claim, obviously a repossessed foreclosed property. And one thing that on this slide that needs to be changed, and I might not have gotten the change in on this one, the commission structure has recently been changed. At one time we paid 5% commission on our HUD Homes, but we've recently switched over to a new system and a way of changing it. And now there'll be a commission of up to 6% charge, but there's going to be a commission split with the listing broker, a 50-50% commission split. So the 5% commission was the way we were doing it on properties, really that were sold up until the middle of September. But here on out, there will be a difference, in the commission that HUD pays on HUD Homes, and it'll be a total commission of up to 6% with but that commission will be a split, and that will be of much interest to people who have sold HUD Homes in the past. You will no longer get a full 5% commission. You'll have to split it with the broad listing broker. Moving on, HUD Homes for sale. We have a new website. It's www.hudhomestore.com. And if you go to that site, that has all the properties in the nation listed for sale there. But it's a search vehicle on it, and you would pick out South Carolina, the county, the city, or the town. You can put in street addresses and whatnot, but it'll pull up all the properties that we have in any given area. And they are now loading those properties in, and hopefully we will have all the inventory listed in South Carolina. I mentioned we used to have in the state of South Carolina the marketing and management firm that marketed and sold our properties and also preserved them was HMBI out of Charlotte. They had a Charlotte office. Now that's changed. There will be 3 different contractors that will market our properties, and each individual house may have a different marketing contractor. And through that the HUD Home Store web page, you will know which property, which contractor that you're dealing with, or as far as submitting bids on properties, and who you're dealing with on an individual properties. But instead of just one that was HMBI previously, now there will be up to 3 different firms that you will be dealing with in any given area. And of course, we sell properties every week, and we get new ones in every week. And previously, the Friday was the date that the websites were updated, and I assume that will continue. The HUD Home Store website will be updated every Friday with new listings. Moving on, how do you sign up to sell HUD Homes? Your broker of your office has to be approved, and the information is on that HUD Home Store page. .com, but you want to click on NAID registration, little block, and it'll bring up the forms that are necessary to be filed. Now, this is also a work in progress, and if we move on, the forms that are needed are on the next slide, and you can download off the internet the HUD form SAMS 1111 and the SAMS 1111A. Now, some of the additional documentation that's not yet on the internet on the HUD Home Store page, some additional information that you will need is your IRS 147C or other IRS document giving your business name and your employee identification number. If you're operating, as an individual, we need a copy of your Social Security number. Also a copy of your driver's license, a copy of your broker's license, and also a utility bill or bank statement that reflects the property address that you're operating under. And you do actually mail those, all of them in South Carolina. Anybody that wants to sign up to sell HUD homes, you will mail it to our HUD office here in Columbia, which is located at 1835 Assembly Street in Columbia. Some contacts as far as HUD Homes and some of the information. We have a real estate homepage that's listed there at the top. Questions, can be also called into our resource center at 888-696-4687. And then, there's also a website for frequently asked questions. If you ever came up with something that we do have a database of questions that are just already out there on the internet at that address right there, and you can access it there. And the Columbia office, I was warned not to give out my personal phone number, but that is the phone that rings on my desk. 803-253-3213 is my telephone number, and I'll be glad to try to answer questions that might come up during the course of a real estate transaction. And the last page, and we just appreciate the support the industry has given us with our FHA programs. Showing the great increase in the number of loans that we have generated in the state, and the quality of our actually the asset quality of the borrowers and everything are higher now than they were in years past. We're doing more business, and it's a better quality of loan, and hopefully that will continue to pay dividends down the road. It's kind of interesting. In South Carolina, our default rates are actually lower than both on our FHA programs, and they're lower than both North Carolina and Georgia. We're running a less severe rate of delinquency and foreclosure and then either one of those two states. So we're doing a pretty good job in South Carolina. But just consider directing your clients to the availability of our FHA products, and you can sell our HUD homes to help us move our inventory of HUD homes. We appreciate that, and and then obviously the reason that you're here is you want to make money and use our programs to do that. But I suppose now that we ready to take any questions that we might have. We have a question about PIMCO and Homatelos, and I'm probably butchering their names. They're two of our contractors, and they say that they'll start listing properties daily as of October 28th. So that's good. They're going to be daily listings of properties that we will have. And how do I get approved to list HUD properties? And I assume that means as a listing broker, you'd be dealing with those three contractors. Two of them are PIMCO and Metelos, I suppose that's how it's pronounced. And you'd contact them to be able to determine, what their needs are as far as a listing, broker. Well, any other questions that anybody might have? Thank you very much. Well, the question is, why do we only have 3 contractors that are selling the properties? Before September, you were dealing with just one contractor that marketed and sold our properties, and they wanted to break that up and make more competition. So they went out with a request for proposals, and now that they actually have 3 contractors that are selling the properties, there are actually now 5 contractors that are receiving the properties and securing them and bringing them up to standards, and then they're going to turn them over to the 3 contractors to sell. So we really got 8 contractors now that are taking the place of the 1 contractor we previously had, which was HMBI out of Charlotte. And another question was, if I was on a HUD approved brokers years ago, do I need to submit a new application? Yes, you have to submit a new application. We require brokers to register yearly, so if you were previously approved, you would have to submit a new application. No, you do not have to register. The question is, do you need to register with all 3 companies? No, your NAID registration is across the board. So, and you really could, use that NAID registration to sell properties if you were legally, able to in either any states other than South Carolina. The NAID registration, is good, across the country. The change in the commission split, what brought about the change in the commission split from 5% to a 50-50 split? I asked that question on our webinar that I found out more about our new contracts that I set in actually on Tuesday of this week, and I'm not sure that I know the answer, but they thought that was the thing to do about it, changing the commission split. The owner-occupant period will now be extended under this new process that we've just started, and owner-occupant properties will be listed for 30 days. And when I say owner-occupant properties, these are properties that can be sold with FHA insurance that aren't cash-type sales. But for other properties that are are in need of repair, that are particularly would be of interest to investors, they're going to be available for investors after 5 days. That is a change, and again, it'll be 30 days for owner occupants. And the reason we want properties in the hands of owner occupants is it does lead to better stabilization of neighborhoods. But if we can't sell the property to an owner occupant, we want to sell it to to somebody to try to return some of our investment that we paid the insurance claim on. So, but again, on certain properties, they'll be able to investors will be able to access them much more quickly if they're cash sales. The 3 contractors will be the entities that will determine, who lists the properties and the multiple listings and whatnot. And people can contact them, and most of them have set up a broad listing broker network already. But again, they will be the ones you would deal with. directly, in that regard. Again, you'd be dealing with the three. How does this process work for a local broker to be considered for listing a property? Again, you would have to contact one of the three or all three of the contractors to see if they need, help in, any area listing the property. But those three new contractors that we have cover the whole state of South Carolina. Okay.
Contractors cover the whole state, or do they cover 3 geographical areas of the state?
I'm sorry, I should have made that clear. They cover the whole state. So, there may be some confusion to start with, with this new system. And there will be changes in lockbox. Our HUD key, our standard HUD key, will probably be phased out in favor of lockboxes. But the three contractors that are listed, and we saw the names of 2 of them, and I don't know the third one right offhand, but they will be selling properties across the whole state. So in theory, we could have one subdivision and we could have 3 HUD homes for sale in that subdivision, and they could be sold. They could be being sold by each individual contractor. So you might have to deal with 3 different contractors that are selling those properties for HUD in that example I just gave. Okay, well, thank you very much. I appreciate everybody's attention. One more? Last but not least, so then the approved broker may not get to list, but the broker and his agents could sell HUD properties and receive a commission, where if their broker is not approved, is not a HUD approved broker, how would they sell HUD properties? Well, yeah, you have to sign up with HUD to be an approved broker, and maybe I didn't make that clear, to sell any HUD properties. Now, as far as listing the properties, you would have to deal with the 3 contractors that we have engaged to sell our HUD homes across the state to see if they have need of your services, listing services. But yes, you have to sign up and be approved by our office to get what's called a NAID number, NAID, and I'm not sure that's an acronym for some kind of identification number. But once you receive that, you can sell any HUD home through the broker. That's any agent can sell through their broker that's approved with a NAID number for HUD properties. Generally speaking, the owner-occupant holding property what was 2 years that we were expected the people to live in the property, but things still come up, and that's something we always want the industry to make us aware of if people are abusing the owner-occupancy period, and people purchase properties in owner occupancies but don't either move into the properties or move out shortly, but they are supposed to live in the properties for an extended period of time. Thank you so much for having me.
What is your phone number and email address?
Well, my phone number is 803-253-3213. 803-253-3213. And my actual email address is william.j.snelling, SNELLING, and that's at HUD.gov. So william.j.snelling at HUD.gov. Thank you.